Managing Director and CFO of Emkay Global Financial Services joins us now. Good morning, Mr. Karwa. Thank you very much for joining us. Well, first up, how does the market look to you as at a macro level? Is there valuation discomfort, or do you think earnings are giving you comfort?
Good morning. I think currently if you look at the market, after almost a decent rally of almost 10% on the Nifty from 8,000 to 8,800 over the last one and a half months, markets currently are taking kind of a breather in terms of the result season has been good so far and trying to analyze the results, and also in the credit policy, this expectations of a rate cut were there and that were not met, and now the stance of RBI being more towards the neutral. So market is kind of even digesting that. So having said that, the result season has been very decent, much better than what people were fearing, and that is also getting reflected in the stock prices and the way the markets have rallied. And expectations are now that we have seen the worst of demon behind us. Probably Q4 there could be some more impact, and next year onwards the things should look much better. So on a valuation front, yes, market seems to be fairly valued, but then markets always look at forward discounting. One quarter down the line and things would, market could be on a much better scale.
Okay. Krishna, good morning. So the obvious question then, what's the way to play this market? Because we have seen again leadership come back to consumption, banks, while IT and pharma have underperformed. So from here on, what would be your portfolio stance?
See, obviously, if you look at the momentum continues to be with the domestic consumption stories or the domestic facing stocks. So that's where if you're looking at earning visibility for the next 3 to 4 quarters, then that's a very strong opportunity even going forward. But there, the question is that most of the stocks over there, if you look at on a bottom-up basis, the valuation seems to be reasonably fair. So maybe the upside potential may not be as high as you would possibly be looking at. And if you look at some of the sectors which have not performed well for obvious reasons, valuation seems to be in favor. So if you look at IT, or whether you look at pharma, or even for that matter maybe telecom, so these are the contra sectors where maybe the valuations are in your favor, but the visibility of earnings may not be so good. So I think it all depends on what kind of a mindset an investor has. If you are playing the momentum game, then obviously you need to be in the domestic consumption stories or sectors like maybe in the passenger vehicles or agrochemicals or even cement, NBFCs, private banks, etc. So they will do well, but I'm sure the returns would be much more moderated. But if you are willing to play the waiting game and slightly be more contra, then possibly IT and pharma could be the sectors which could give you better returns over a 12 to 18 month period.
Okay, Krishna, good morning. I was going to come to the pharma space because as a house, one of your top conviction ideas has been Aurobindo Pharma, and that stock, in fact, that company posted a steady state of earnings this quarter. I know you won't talk about individual stocks, but just wanted to understand whether this space has come back into action for investors, because it had lost some of its, luster over the past 1 year or so. Do you see more value here now, especially in some of these bigger names?
Certainly, I think if you look at it, yes, the stocks have underperformed, and for obvious reasons. There has been headwinds in the US market in terms of consolidation of distributors, etc., and pricing pressure in the generics market, and also most of the companies have had issues with US FDA as far as their various plant inspections are concerned. My sense is, as far as the competition or rather the pricing pressure as far as generics is concerned, what we have been given to understand is that probably it's bottoming out, and the pressure is not as high as what it was maybe 1 quarter ago. So that's almost done with. And as far as US FDA inspections are concerned, I'm sure over a period of time issues will get resolved, and on a company specific basis you can look at it. And if you look at the valuations and the return ratio that these companies enjoy, then on an FY18 basis, most of the companies look very, very reasonably valued, maybe at a discount to the market. And I think that's the opportunity.
Oh yes, but there you'll have to pick and choose, isn't it, Mr. Karwa? By the way, you too have tied up with DBS Bank, haven't you, for research? What exactly is this tie-up?
Yes, so we have tied up with Development Bank of Singapore, basically DBS Bank of Singapore. So this is an equity research tie-up where Emkay's India research will be co-branded by DBS and distributed to all its institutional clients across the globe. So this is a very prestigious tie-up for us. It is a clear-cut vindication of our quality, depth and integrity of our research, and we are very enthused about the prospects for Emkay research. Also, we will have the benefit of interacting with the strong research setup which DBS has for its all across Asia. So Emkay's research will also be able to collaborate with them and be able to offer the same quality research to the domestic clients.
Okay. Krishna, just one final question. The fund flow situation, since you have both domestic and foreign clients, do you see this trend continuing? Domestic liquidity supporting the market while foreigners stay away?
As you know, domestic, yes, the fund industry, mutual fund industry has been growing phenomenally. I think last year they have grown by almost 30% on an overall basis. Even in the month of January, I think the domestic flows into the mutual funds have been to the extent of something like 14,000-15,000 crores as far as equity is concerned. I think there is a clear-cut trend that household savings are getting converted into financial savings, and with interest rates being where they are, the trend is decisively towards equity as a savings instrument. So that flow will continue, and our interactions with HNIs, super HNIs, retail, etc., they are all struggling for fixed safe returns, and everybody is willing to put money into equity. Also, I think the education that has happened over the last so many years, nobody is putting money at one stroke. They are all putting money over a different time frame, or maybe SIPs, etc. So that has also helped the trend. So I think this flows will continue. As far as FII flows are concerned, they have been caught unawares in terms of the bounce back which they have seen in the Q3 results vis-a-vis what was expected. The negative impact of demonetization has not been as bad as they were expecting. So I think they have been caught unawares, and I think FII flows will also be a part of the overall flows into the emerging markets, which have again turned kind of positive. So we expect flows to be positive for India from the FIIs also.
Okay, one more space that you have been very bullish on, your house has been bullish on, is consumption. Within that, you have ideas like Godrej Consumers, Imami, etc. But do you think that the volume slowdown that we saw because of demonetization has come to an end and some sense of normalcy has returned, or is that verdict still not out yet?
In terms of our interaction with at the second level or third level, which is with the distributors, wholesalers and retailers, etc., I think the feeling that we have, when we interact with them, that every month is a better month versus the previous month. So obviously, yes, November was a tough month, but December has improved, and again January has been much better. So the sense we get is that obviously the unorganized sector has got hit, and that has also helped the organized sector, and even corporates have been very accommodative as far as the channels are concerned in terms of credit period, etc. So overall sales are improving by the day, and now with currency in circulation improving, the sense that we get is that by March end most of the it will be all back to normal, and you should be back on growth from the Q1 onwards.
Okay, so we hope. Thank you very much, Krishna Kumar Karwa, for joining us with your thoughts.